The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Tuesday. Hope everyone's ready to make history here on the Financial Exchange as the S&P 500 barrels through to a new all-time high as of today. It's Mike, Marc, and Tucker with you in a jobs week here. We had a JOLTS report this morning at 10 a.m. that we'll be going through. Still the midst of earnings season here with SpaceX and AMD to be the big ones to go this afternoon after the bell, but McDonald's, Marriott, and others letting us know how they're doing as well. We've got stocks beating up on their previous all-time high, which was reached back in June of last year at 76.21 on the index. Now intraday sitting at 76.68, Marc.
Is that a new thing, touting the all-time high? Because stocks trend up. It's almost like saying I got older last year relative to this year. Stocks trend up, so they've hit all-time highs under every president, I think, except like Ford, if that's your chronology. If that's
Marc also doesn't celebrate his birthday, just so we're all on the same page.
No, is it if stocks were not hitting all-time highs,
it would mean that they're going down,
It would mean
or being flatlining.
But my point is the trend is up. So outside of recessions and the occasional plateaus,
hitting a new
stocks
all-time
are
high
always hitting all-time highs.
Is irrelevant. I think what people do celebrate,
if only because of inflation, incidentally,
like big Dow milestones. People have notoriously celebrated 50,000 on the Dow.
I will,
etc.
Allow that.
But you're right. The S&P 500
it should always be hitting new highs. Stocks tend to go up. A little over half the time, daily basis, a little over 6% of the time, monthly basis. We know the statistics. We see the trend line. If they're not going up, it's when it's sort of notable.
I suppose a little bit more unique would it be the S&P 500 averaging something like 20-odd% for the last 3 years. That's a bit more
definitely
something to talk about and noteworthy. But Marc actually doesn't celebrate his birthday. Nobody actually knows when it is. It's a little bit like Ron Swanson from Parks and Rec, if you've ever seen that show. Nobody knows, and it's just a secret.
Like the third week after the first harvest moon in August or something.
Yeah, exactly.
It varies.
Is today your birthday? Is that what you're trying to?
I will be on the air on my birthday this year, but no, it's not today.
I'll just say happy birthday every day.
Yeah, let's just guess every day. Happy
birthday,
every time Marc is hosting, we're just going to say happy birthday, and one of the times we're going to be correct, and we'll see whether or not he acknowledges it here.
Eyebrows go up slightly.
Yeah. Other news out there this week, we'll have a Friday jobs report, getting a reading on the state of hiring and firing in this economy, where it's coming from. And then, as I mentioned, JOLTS came out about 9 minutes ago. We'll try and get some coverage of that in the next segment once all of us actually have time to read the thing, because it is hot off the presses here. But earnings are rolling in, and this economy and market continues to be driven by one thing and one thing only, which is obsession over any company related to artificial intelligence. And piece from Axios this morning, the AI-driven boom in profits comes with some caveats, is something that we've talked about a couple of times before. And the article points out that the S&P 500 posted 40% year-on-year earnings growth in the first and second quarters of 2010. And we are seeing those types of returns right now in terms of massive earnings growth across the S&P 500. And pointing out that it is pretty impressive. The only reason you reached 40% year-on-year earnings growth back in 2010 was because you were in an abysmal economy and market in 2009, and so you were coming off some very low lows. But what is if there is a caveat to this earnings growth right now, Marc, and it's one that we've pointed out a few times, to me it's that cash flow, free cash flow for those same businesses is not looking so solid and is turning negative in some cases. And a lot of the earnings growth itself, rather than coming from, hey, I sold this widget and drew some profits, is instead coming from, I own this company or I own a part of this company, and the markets think it's much more valuable than it was 12 months ago.
Yeah, I guess that's concerning. I tend to just look at the series and take it at face value. The caveat for me is a little different. It's that earnings growth is not predictive. In fact, high earnings growth periods are followed by low earnings growth periods. It reverts to a trend, if you will, because earnings can't grow faster than the economy forever.
In perpetuity.
If you prefer. The other, and this is a question that we raise in many different forms, is how are they going to get cash flow? All I care about as an investor is free cash flow, what's available to pay out to me as a dividend or in the form of a share repurchase. How are the hyperscalers going to resuscitate free cash flow? Will the benefits of AI accrue to them or to other firms?
Yep.
That's all I care about as an investor.
Right.
So keeping those two things in mind, it's noteworthy, but it's also a little bit unsettling that earnings have grown so fast.
Yeah, I think that's the unsettling phrase there, I think, is the right one. We'll talk a little bit later about Archibald something's Leopold, yeah, his hedge fund that blew up, and the warning signs that maybe should have come from 430% returns in a quarter or a half. And we're experiencing something in the overall market right now, which is very outsized earnings growth that is pretty rare, and a lot of questions about how that could possibly continue. And examples that they write about here, Amazon's second quarter earnings grew by 242%. Alphabet's by almost 300%. And you look at that and you say that's obscene. The insane gains, though, however, were pretty much almost entirely a result of non-operating unrealized gains. So unrealized gains being, I made an investment, I didn't sell the investment and take my cash. I just have to mark that investment back to what the market, what we think it's worth. And a huge portion of that came from investments in Anthropic and SpaceX that they had to kind of readjust and revalue. And so I think importantly, and we've been talking about this a lot on the show, we're focusing a lot more in this moment, and I think a lot of investors are, on that free cash flow metric, because as you mentioned, that is going to be the driver of the next dividend payment, share repurchase, and additional capital expenditures.
Yeah, and you can't learn anything about that given the data we have. I think
Explain what you mean.
I don't know I care about future free cash flow as an investor. That's what is left over after making investments to keep the business going, more or less, to pay me a dividend or via increase in earnings per share through share repurchases. There are different ways companies can distribute cash. So I care about future free cash flow. I really can't forecast. There are ways of forecasting it. I don't do that. Some people do. It's especially hard to do right now because, again, the benefits... The extent to which the benefits of AI accrue to existing publicly traded companies like the hyperscalers who are making all these investments is pretty uncertain.
Yep.
I'm sorry. I'm saying the same thing over and over again. I don't know how else to put it.
But the lessons it's important to say the same thing.
Okay,
over and
the
over
lessons
again
of history though are pretty unkind. Are pretty, to use the word again, unsettling. We know what follows periods of massive investment in anything, in railroads, in fiber optics, you name it. Ruinous competition, bankruptcies, recession, big market declines. Will this time be different? Because AI is different than other general purpose technologies. The thing learns. It not only can help you do what you do today better. It can tell you how to do it differently. That's what's, electricity doesn't jump out of the socket and tell you to organize your factory floor differently. You got to figure that out. It'd be a little disturbing if it did.
Yeah.
Right? That's what makes AI different. I acknowledge that. But will the benefits of that accrue to, Meta, Microsoft, Oracle, Amazon, Alphabet? If I left any hyperscalers out, maybe I did. We need an acronym for that, I think. That's the what?
Multi-trillion-dollar
I was going to say,
question.
it's at least $1 trillion question, because that's what they're going to be plowing into AI. I'll just call it infrastructure.
Let's take a quick break. As markets reach new all-time highs, Bloomberg apparently having a slow news day to cover, as they just announced that New York City rat sightings are down 22%. So we've just got a series of great news this morning. We're going to take a quick break. We're not talking about rat sightings when we come back. We are going to tackle jobs next on the Financial Exchange.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years, when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years, when convenience starts to matter more, and eventually the no-go years, when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
From breaking news to market analysis, follow the Financial Exchange Show on X and watch the show live every day. This is the Financial Exchange Radio Network.
The Financial Exchange streams live every day on YouTube. Subscribe to our YouTube page and follow market activity all morning long. Only here in the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
This morning at 10 a.m., the Bureau of Labor Statistics released information on their JOLTS survey, which stands for Job Openings and Labor Turnover. They perform this survey once a month. It's measuring the number of job openings at the end of June, so a fair bit outdated, but I can't say that anything specific to the labor market that I can note changed dramatically between now and June, and so I think it's probably a relatively good gauge. The number of job openings did not change much. We're sitting at 7.4 million in the month of June. The hires rate also didn't change a whole lot. We sat at 5.3 million while total separations was at 5.4 million. So I think what you can draw from this report, and there's a few other statistics we can talk about, but it's something that we've talked about several times here. The job market is not nearly as robust as it was in the earlier 2020s, coming out of the COVID pandemic when the pace of hiring was very, very fast. But it has improved from the concern employers seemed to have last year. And the JOLT survey seems to be indicating that the number of people looking for work compared to the number of employers looking for employees is somewhere around equilibrium at the moment. They don't seem like they are desperately clamoring for new employees. Certainly there are some people looking for work or who are having a tough time. And these statistics, I don't think, completely negate that either, because the pace of hiring hasn't really picked up a whole lot either. I do want to think this, well, a few things that I want to think through. We're now well away from the 2025 period of hiring and the massive slowdown that we saw. I don't know the exact statistic, Mark, maybe you do. The average pace of hiring in 2025 was close to zero per month.
Payrolls,
the payrolls, yeah.
Yeah,
How many
like
jobs were actually
90-something
added?
hundred a month.
So
it was a disaster.
It was a really
Forgive me, but it was.
ugly employment situation in
Ugly is a better way to perhaps to
2025.
put it.
The unemployment rate rose.
And by the way, to put it in perspective, it was over 110 or 20 the year before that. And it was about 200 the year. So it had been trending down, but the job market, as measured by the payroll survey, the establishment survey, which asked businesses how many people did you hire, it came to a screeching halt in 2025, probably in part due to tariff uncertainty. That's what businesses told us.
Yeah,
in surveys.
Businesses surveyed told us that. I think there was part of
error.
it. I think there was another part of that wasn't entirely this piece. I think there was another part of this that was investors are clamoring for any signs that I'm benefiting from artificial intelligence. This was something that we saw in earnings reports when big companies came out and said, hey, we're not hiring for this job, or we laid some people off because AI is allowing us to be more efficient. Whether it was true or not, investors tended to reward those companies. And so I think some combination of tariff uncertainty, which was robust.
Well, it started. The reason I'm speaking so definitively is that it started in March. January, February were fine. March fell off a cliff.
Yep. So it seems like it was pretty much related to that. And the reality is that today, while there are new tariffs in place, and there's a new lawsuit, I think 24 states' attorneys general are suing the federal government over the new round of tariffs. It's been sitting here between 10 and 15% now for quite some time, and businesses are seemingly better able to make decisions with that degree of certainty.
And they're a little less whimsical. The president can't wake up on the wrong side of the bed and hit Brazil with a tariff.
Right.
Because the Supreme Court said you can't do that.
Yeah.
Shocker.
So that's the state of things right now. When we take a look at the upcoming jobs report, again, we get we get a few more than two, but from the BLS, we get two major jobs reports this week. The first was the one I just mentioned, the JOLTS report, which basically indicated no real change month over month, May to June, in the pace of hiring or pace of firing. This Friday, we will be getting the full jobs report for the month of July, which gives us the unemployment rate, the average hourly earnings, and the total number of payrolls added or subtracted from the U.S. economy. Forecast that I'm seeing right now is around 83,000. The previous month was down to 57,000. So we'll see, right? The pace of hiring has picked up dramatically in 2026 compared to 2025. Can we keep along that pace, and do we start to see wages moving in one direction or another? One trend that I think has kind of reversed is that idea of mass layoffs from AI. While the fear is still there, we are definitely not seeing it from major employers that they're saying, hey, I'm laying off these people. In fact, the more and more I'm hearing is, we laid some people off and turned out we didn't really know what we were doing on that front and need to go hire back some folks that we didn't think we previously needed because of AI. So we will see where that trend goes. Anything else to add?
No,
I guess
it's
the one thing that I want to add. I'm sorry to cut you off,
no,
Mark,
it's your show,
and ask you about, but what it all means for the Fed is kind of all important.
Well, I was going to put we're going to get into the Fed.
Sure,
it's the only reason I'm employed here, but
ooh, the Fed. Go ahead.
As he drums his finger, Montgomery Burns style.
Waiting 2 more minutes until Fed
Federal
talk.
Reserve.
What time is Fed talk?
It was to get Chairman Warsh for me, Smithers. This is a low fire labor market. That's what it's been called, and that's
as good a description as
I think it's perfect. And these are very long-term trends. Low hire refers to the hire statistic in the JOLTS report. Low fire refers to terminations. Obviously, there are voluntary separations reported as well. These series, as the Cleveland Fed points out in a great commentary this morning, have been trending down for a long time for maybe demographic reasons. Workforce is getting older. People tend to turn over in their jobs less as they get older. Most of the job turnover occurs in your 20s, not in your 40s and 50s, thank God. So for various reasons, namely the structure of this isn't very insightful. It's either the structure of the labor market or the structure of the economy. Well, yeah, they've been trending down for a long time, these series. So in a sense, this survey gets less and less useful, maybe in terms of signaling turning points. Some people find the job openings, and you alluded to the openings to unemployed people, that metric. Some people find measures like that useful as proxies for slack in the economy and their inflation forecasting models. But we'll talk about inflation later.
Taking a look around at markets, the gains are accelerating a bit. We've got the Dow up 600 points, S&P 500 up 72 points, the NASDAQ up 416, and oil, which had been up earlier, taking a big drop this morning as well. We're going to take a quick break here, and when we come back, Tucker's going to have a full recap with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699, or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Navigating Retirement Housing Choices. Mike, as you get towards retirement, what are some of the considerations for whether you should stay in the property that you've been in for a while or consider moving to a new one?
To me, for most people, they come down to 2 factors. One would be financial, and 2 would be quality of life. And so, first things first, right? I mean, you're heading to retirement. Did you do enough saving to be able to afford to live in the same place you did, with or without that mortgage, with where property taxes and insurance costs have been going? So that's probably number one. But the one that people kind of start to forget about is the quality of life. And so how close am I to family? How close am I to health care? And am I going to be safe in this house 20 years from now from a healthcare perspective?
It seems like for most people, they're going to have different priorities as far as which of those come first. So it very much is not, here's what you do, but more, here are the things you need to consider and then get to your own conclusion.
Yeah, but I think it's important that people think long-term on this, right? You do not want to make this decision twice. And so very often we do see that happen. Hey, I'm moving here because of taxes, and I didn't think about the other qualitative lifestyle pieces about that move.
Folks, our guide is titled Navigating Retirement Housing Choices. There are 2 ways to request it. First, you can call 800-393-4001. Second, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are building on their rally as investors sift through a new batch of earnings. Also, Treasury Secretary Scott Bessent told CNBC that the U.S. and Iran could reach a deal to open the Strait of Hormuz as soon as today or Wednesday, sending oil lower. Right now, the Dow is up 1.1% or 617 points higher. S&P 500 up about 1%, 73 points higher. NASDAQ up 1.6% or 414 points. Russell 2000 is up nearly 0.9%. 10-year Treasury yield down 4 basis points at 4.64%, and oil down 5%, trading at $76 a barrel. Palantir surging 25% after the enterprise software company posted second quarter earnings that CEO Alex Karp deemed as otherworldly, driven by customer demand for AI sovereign tools. Meanwhile, McDonald's said sales at U.S. restaurants climbed only 0.8% in the previous quarter, its slowest growth since the start of 2025. The fast food giant also named Skye Anderson as its new U.S. president to bring focus and urgency to its home market, replacing Joe Erlinger. Shares are up by 1%. Elsewhere, Caterpillar handily beat earnings expectations and lifted its profit outlook, driven by continued demand for construction equipment. That stock up by 4%. Wayfair rallying 28% after the online furniture retailer saw its strongest U.S. growth since 2020. And after today's close, we'll see earnings from AMD and SpaceX. I'm Tucker Silva, and that is Wall Street Watch.
Marc, I want to jump to Japan here and talk about something that happened over the last few days that is a bit technical. So I find it always helpful when we're getting into these somewhat technical subjects that people don't frequently think. Like, people think about stocks a lot. They think about jobs a lot. They don't think about the price of $1 in Japanese yen very frequently. And so I like to take a step back and talk about why this stuff sometimes matters. So first things first, global currencies trade just like any other type of security, I suppose. You can trade currencies, and it's actually a pretty active market. The Japanese are the single largest owner of U.S. government debt outside the U.S., So, in terms of country stacking, Japan is the single largest owner of U.S. government debt, which comes into play with all of this. They and everybody else need and use dollars in order to fund all sorts of things. In this moment, importantly, buying oil on global markets. And their currency, by some arguments, had cheapened, is that the right word to use in this circumstance? Considerably over the course of the last several months. And so,
you could just say depreciated.
Yeah.
But you have to, it's always relative to something.
Yeah, it's got to be relative,
dollars, euros,
right,
some other reference point. Yeah.
And the answer is it depreciated substantially against the dollar over the course of the last year or so. The U.S. government now has stepped in order to support that currency, and for the last couple of days at least, seems to have been successful in doing so. So taking that step back, I think we have the context. Japan owns a lot of government debt. They need dollars to buy oil and other goods. Why is it in the U.S. interest to support the Japanese, or why might it be in the U.S. interest to support the Japanese currency?
The pretext, the stated argument in favor of intervention is that they're going to intervene. The Japanese are. Intervention is the term used when a government, a central bank like the Fed, not the Fed right now, but the Bank of Japan in this case, steps into a market and buys or sells something to influence its value, namely its currency in this case. So the pretext for helping Japan in its intervention to push up the value of the yen is, well, they're going to do it either way, and we don't want them selling their U.S. treasuries to raise the dollars, which would in turn be exchanged for yen by Japan to push up the value of the yen. As you pointed out, currencies trade like any asset.
And as I pointed out, Japan holds a whole
a little over $1 trillion
crap load of U.S. government securities.
That's accurate.
So if they do it themselves, then one way of doing it would be say, hey, we're going to dump all these government bonds that we have. We need to raise cash somewhere, and we're going to use it to buy our own currency, which should make it more valuable. Is that's effectively what we're talking about?
We wanted to avoid that eventuality because rates are already at multi-decade highs here in the United States.
Yep. And if you have a giant seller of U.S. government debt, then it could force it could force markets to drive that rate even higher because you have one fewer buyer.
That's the stated reason. Another possibly likely reason is that it has resulted in a stronger yen relative to the dollar. It takes fewer yen to buy a dollar than it did before this intervention. Several. It's not that pronounced at this point, but it's meaningful nevertheless. That should help U.S. exports, all else equal.
And I think this administration, whether you like this policy or not, is pretty focused on U.S. exports and trade imbalances and all those things. And
they're obsessed with it.
If the yen
they're
is
obsessed with
devalued, then it's going to be tough
They're
for those
fanatics.
exports to work. Yeah.
Yeah. So, and Trump seems to like to do like when asked to comment, I like Japan. I like the way the prime minister dresses or something. He didn't say that, but it was just about as substantive as that.
This is the second
honestly, you got
intervention.
nothing out of Trump. Bessent, on the other hand, is a forex genius.
Yep.
I'm not saying his motives are necessarily in line with what most people would think is America's best interest in this case, but he knows what he's doing.
Okay, so what did we actually do? Right, because the U.S. intervened with Japan.
Evidently,
in the
we
currency.
sold, according to Treasury, and I don't know if we can substantiate it yet. By that, I mean, I don't know that we have the data yet, but we sold euro-denominated assets, or just euros, which is the currency of the European Union, to buy yen. You could think about it in very straightforward terms like that.
So one of the theories could be, hey, we didn't want U.S. bond yields going even higher than they already have. We didn't want a bunch of sellers of U.S. government debt. So we're going to team up with Japan here, and instead we're going to, I don't know if it's punishing euros, but we're going to sell the euros to support this
I don't know
currency
that we didn't have to do it. Yeah, I think there's probably a vindictive angle to it, knowing this crowd.
Sure.
And by that, I just mean they like to punish their enemies and reward their friends.
Mm-hmm.
And they view Europe as an enemy for some reason, or maybe just a competitor. Go ahead.
So just in terms of how unusual this is, for some context here, the U.S. hasn't been involved in supporting the yen since 2011, which was after Japan's earthquake and tsunami. And the first time this ever happened was 98. So first things first, this isn't something that happens every year or two. It is a pretty rare event for the U.S. government to decide to join up with another central bank and intervene. We did do it with Argentina, I'm reminded of, just last year, I believe it was.
Yeah.
To support the peso, but it's a pretty rare instance that this type of thing happens. I want to now turn to the Fed, and there's this piece from CNBC about how the Federal Reserve may be pulled into Bessent's effort to support the Japanese yen. And my main question there is, this Fed chair has he has criticized pretty much all of the previous Fed chairs for expanding their scope beyond the dual mandate. And my question is, what does supporting the yen have to do with inflation and jobs in the United States?
Just briefly, I want to correct something I said. We do know that that Treasury told the Federal Reserve Bank of New York, their agent in the foreign exchange market, to sell euros to buy yen. So we do know that.
Okay. So
sorry, I just wanted to correct that. I misspoke. Sorry.
We went a little long. Let's take a quick break. When we come back, I want to expand on this because, again, context here is important. And while the average American does not buy and sell Japanese yen, this story is a fairly big one in financial circles. So I want to turn back to it. Bessent, Fed, Kevin Warsh next on the Financial Exchange.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years, when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years, when convenience starts to matter more, and eventually the no-go years, when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
From market moves to retirement planning strategy, follow the Financial Exchange on Instagram and stay up to date on the business news of the day. This is the Financial Exchange Radio Network.
Marc, as we discussed, so the Treasury took a rare step to intervene in currency markets, supporting the Japanese yen, which had weakened significantly against the dollar over the course of the last year and specifically over the last few months. There could be any number of reasons to do this, including just liking the Japanese and aligning with them, because a weak currency for a nation that has to import pretty much all of its energy becomes pretty problematic quickly. And so that could be part of the reason here. It could be that we were worried they would dump U.S. government securities. It could be a means of punishing the Europeans.
Explained, Mike, much like it wasn't in Argentina. It seems like they're doing favors, for people that they like. Japan is an important ally. We have a lot of important allies, and we don't routinely. Go ahead, sorry.
No, you're good.
Yeah, a point you already made. This is not routine.
It's not. It's
unusual,
pretty rare.
And it's unusual. It involves a lot of money. It does not, by the way, address Japan's long-term structural problems. They are trapped. They are caught, as one author put it, I'll pretty much quote here, between the need to keep long-term government bond yields low to avoid a debt crisis and a growing urgency to stabilize the yen for reasons you pointed out. Mm-hmm. So U.S. intervention here, BOJ intervention for that matter, probably has a short half-life. Japan's structural problems are enormous and not at all addressed by this Band-Aid.
In the meantime, there's, rumors or papers being written about the Federal Reserve maybe being pulled into all of this. And I don't really understand the structure of that, but I guess while I think we should get more of an explanation as to why we're intervening in Japan from the Treasury, I would deem that even more important for the Federal Reserve, who has spent the last decade and a half criticizing any Federal Reserve member who does anything other than focus on the dual mandate.
Okay, if they give access to swap, if they take I'm going to get way in over my head here.
I'm not sure you need to.
Okay.
But go ahead.
No, if the Fed got involved and indirectly put taxpayers on the hook, then we need to talk. We already don't know what the rationale for this intervention is. It seems to have been successful so far, but it's likely for structural reasons, as we pointed out, to have a short half-life. Did we just do this because Trump likes the prime minister and is trying to help her out? I don't really know. Bessent is just doing victory laps. These guys like taking victory laps but not explaining things. I would find an explanation. Maybe it's coherent and compelling.
Yeah.
I think taxpayers who are ultimately on the hook for this stuff deserve that.
Right. And to be clear, the Fed has two jobs. And again, we've criticized the Fed in previous years when they've started to, diverge from those, when lawmakers have pushed them to focus on climate policy or, monopolism or all these other things that chairs have been questioned about in front of Congress. We've criticized anybody that's diverged from that dual mandate. Hey, the job is to keep
financial
inflation
stability
stable.
Too.
Yeah,
so if there's a financial stability angle here, if further depreciation of the yen, and this raises the question, by the way, or this actually begs a question because you're assuming something, right? If Chuck were here, he would correct me, I think. But I think this begs a question. I think I'm using that phrase correctly. Chuck will tell us tomorrow. Sorry, but I always think, oh my God, did I say something that Chuck would find offensive grammatically? This begs the question, what does it mean for a currency to be undervalued? What's your measure? Bessent should explain that. Yeah. Is it just that he thinks speculators have pounced on it, much like he did when he's the guy who drove the pound out of the euro's exchange rate, out of the European economic community's exchange rate mechanism at the time, and made a lot of money for George Soros and himself.
And if the Federal Reserve does need to intervene in the Japanese currency in order to maintain financial stability,
well, they're just going to loan the Japanese money. They're going to allow the Japanese, I believe, to pledge treasuries as collateral. It gets complicated, and I would get it wrong if I tried to explain it. They're not going to actually print money to give them.
Well, one day you're living in your own home, and the next you can't return home after rehab. Now you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major financial decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid and what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. Once again, the number 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Marc, speaking of Kevin Warsh, he's been, I think the going consensus in financial media is that he did a pretty abysmal job at the press conference last week and left a lot of people wondering. And I haven't been able to talk to you about it. So
disagree.
The reaction from markets was that longer-term yields went higher, and the reaction from the media was that he was unclear about the policy and the messaging. Yeah. But I did get the sense that you disagree. So walk me through your argument.
And I'm a fan of Warsh.
I do. Yeah.
So I'm biased.
He's got his poster on his wall right next to Buffett's.
Do they make a poster?
Yeah.
So I'm a little bit biased here because I like his philosophy. I like his almost fanatical focus on price stability. Mm-hmm. I wish they would have raised rates a little bit just to add some substance to that stated conviction. But the price of oil has come down over the past couple of weeks, so there may be some disinflation baked into the cake here, so that may look prescient, that standing pat in retrospect. Bond traders are mad because they've only had to work once every 6 weeks for the last, call it 20 years. No offense if you're a bond trader, but you know what I mean. You sit around and you wait for the Fed to tell you what's going to happen on the long end, and you trade accordingly. Mm-hmm. And all of a sudden, Warsh is telling them, no, we're talking, as Greenspan put it a long time ago, in a mirror when we do that, if we also look to the bond market for signals. Warsh is saying, let price discovery work. I'm not going to, how did he put it? He said he wants to be the referee.
The comment about the referee.
Yeah. Effectively, they're not going to stack the deck. Bond traders have to now, based on either internal forecasts or other means, make a guess as to what the right rate of long-term is vis-a-vis short-term interest rates. And that was, maybe Warsh could have put that more clearly. And part of me is, you know what, we're coming up against the top of the hour.
We got a full
I'm
other
really
minute.
fired up. I feel like I could go a while longer. So in the interest of respecting the radio clock,
my takeaway was that
pick this up later?
I think there are a lot of bond traders
who
were, not sure what to do with themselves and maybe lost their clients some money over the course of the last
fascinating
few months.
Study just published. Can I tell you about it in the next hour?
Yeah, you can.
Okay.
But the overall changes, like I don't have really an issue with the Fed going to fewer than 8 meetings a year. I don't have any sort of issue with them wanting to talk less. My main criticism of Warsh was that he came across as not really knowing what he was talking about, and I get the sense that he does know what he's talking about. And when asked specific questions about why, with inflation pushing, did you not move, I thought that his answer could have been conveyed a lot better than it was. And so, as we said from the beginning, this person should be judged based on how their actions actually perform over the course of a longer period of time, not based on what they say. But he might need to say even less than he already has if that's going to be his press
I want to give
conference.
a spirited defense of Warsh.
Sounds
maybe
good.
In the next hour.
Let's take a quick break. When we come back, a spirited defense of Warsh next on the Financial Exchange. Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1-mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Tuesday. Welcome back to the Financial Exchange. It's Mike, Marc, and Tucker with you on a day where markets are surging. All three major U.S. indices up more than 1%, with the S&P trailing the other two, up only 1.2%. NASDAQ in the lead at 1.7%. So more earnings to come this week, including SpaceX this afternoon after the bell. Heavy jobs report week this week, with the JOLTS report out just over an hour ago, indicating that as of the end of June anyway, not much change to the pace of hiring and firing in this U.S. economy, with job openings sitting unchanged at 7.4 million in the month of June, hires unchanged at 5.3 million, and total separations, which does include both quits and layoffs, also not moving around a whole lot. So Friday morning at 8:30, we will get the monthly jobs report for July. That's going to give us the unemployment rate estimate, as well as the total hirings rate and some information about wages. I say estimate because all of this stuff is an estimate. We don't actually measure any of this. We take surveys and try and get a sense of things like the unemployment rate, but they are ultimately guesses. But the year so far has been defined by an uptick in hiring, also an uptick in inflation, partly to blame on oil prices and energy, or mostly to blame on energy prices. And it has left the Federal Reserve in a position where they have been and have needed to frame the conversation as how tough they are going to be on inflation. And I want to start the show there, which was last week's press conference and announcement from the Federal Reserve that they were not moving on interest rates, and that Kevin Warsh was going to talk less and let the markets do their job, in his view. Marc, you thought that was, well, let me not put words in your mouth, but you were less critical of that press conference and performance than others were.
Markets are spoiled. Bond markets specifically are spoiled. They're used to the Fed telling them what short-term rates will be out to a very for several quarters, years. With that information, you can construct an estimate of what longer-term rates should be, as opposed to letting the market, using other sources, guess, and through price discovery, it arrive at the right yield on the 10 and the 30-year Treasury. So bond traders were upset because their job just became harder. It's and they're the people who carry water for them in the Financial Times, Bloomberg, and elsewhere dutifully report their criticisms of the chairman. An incredible conclusion was reached in a paper. It was written a couple of years ago, but only recently published by Sebastian Hillenbrand at Harvard Business School. Hillenbrand found, and we all know that interest rates have come down over the past 40 years.
Yep.
We'll call that the secular, long-term, and it's been global, decline in interest rates. What Hillenbrand calls a striking fact, the entire decline in long-term interest rates over the past 40 years has occurred around Fed meetings. Changes in interest rates outside of a couple days around Fed meetings have not contributed to that decline. That is a stat. When I was blown away by that observation and by the genius insight that led him to do the statistical work that supports that conclusion. That to me, and I'm surprised more people haven't connected this paper and that finding with Warsh's ideological predisposition to not only say less about what he's thinking, but say less about the path of short-term rates, which in turn enables bond traders to sort of to make their best guess at what long-term rates ought to be.
So let's say I buy this paper that the Federal Reserve, the central bank, has effectively guided interest rates lower over the last 40 years. That's the point?
That's actually a really good way to put it.
And I agree that is a little bit different than allowing free markets to do so.
And by the way, that's through them telegraphing what they think. Sure, if you think of a long-term bond, all else equal as being a chain of shorter-term instruments, meaning instead of buying a 10-year Treasury, I could buy a 1-year, and in a year when it matures, buy another 1 year. If there were no risk to holding a 10-year Treasury, inflation risk and illiquidity risk in theory, those two rates should be equal, but they aren't. There's a so-called term premium, a risk premium, if you like.
So then tell me, what's the problem with that scenario, right? Is it too much power in one organization? Is it is the idea that the Fed, for the last decade at least, has pretty much had a policy of let's not surprise the markets? What problems does that lead to for the economy that Warsh wants to fix? Is it that the Fed can oftentimes be wrong?
Well, it's that you can't ascertain anything from the level of long-term rates, including the spread between the observable rate on nominal treasuries, say the 10-year that we all read about in the newspaper, 4.65 roughly right now, maybe a little lower this morning, and the yield, the real yield on a TIPS security of equal term to maturity. You can't take that spread and say that's expected inflation. You probably shouldn't anyway for other structural reasons. The Fed can't infer anything from long-term rates because it's helping to set them.
Determining them. Yeah.
Greenspan identified this problem 3 decades ago. He said oftentimes we're talking in a mirror. So I'm trying to glean something from market, but markets are responding to what I'm saying. So I'm
circular reference warning from Excel.
I think that's also a very good way to put it. Again, I think it's a fascinating conclusion, and undoubtedly it'll be picked apart first, possibly for statistical reasons. That Hillenbrand, as I mentioned, published recently, that the entire decline in interest rates over the past 40 years has occurred around Fed meetings. Everything else, fleeting.
Yeah. Look, I mean, I would love to see a Federal Reserve that does a lot less talking, that allows markets to guide themselves, and perhaps is only speaking very publicly in moments of real crisis. I think that would be, and maybe you debate whether or not they should be doing that even, but I think there's a place for the Fed to step in, say in March of 2020 or in 2008, to support the economy in words, if not actions. But yeah, I think arguably, pardon me, they spend far too much time talking and guiding through what has been some fantastic years in the economy, and perhaps holding the leash a little bit too tightly.
Rates could be a little bit more volatile as a result. But I don't think that necessarily translates into more volatility in real macroeconomic time series, GDP, unemployment, and stuff like that. The great moderation, the reduction in volatility in all those time series started well before the Fed got diarrhea of the mouth. And Warsh knows this. Could he be a little more crisp in his economic explanations? Yeah, he could. He's not a trained economist.
Yep.
He doesn't have the models in his head that allow him to convey something coherently and succinctly. I'm a little uncomfortable with the way he phrases things sometimes. I was very uncomfortable with the way Powell phrased things sometimes. You could tell they're not trained economists. They don't have a sketch of the models the Fed's using in their heads so they can at least explain clearly to people why they're doing what they're doing. You don't have to tell people where you think you'll be in 6 months, but explaining why you are where you are today is important. Warsh needs to do a better job of that, I'll admit. But I think in a directional way, he's making improvements.
In any case, how this affects you is that this is a very seemingly different set of policies than was used by Powell, Yellen, and Bernanke before him.
Agreed.
It seems to be a departure from those three
Yeah.
at least. And I named those three only because those are the three Fed chairs that I've really lived amongst, and it might be different than others before them too, but it's definitely a departure from those three, and it's something new.
Bernanke implemented a forward guidance as a matter of routine. We were at the so-called zero lower bound. Rates couldn't lower Fed funds any more than they did. Zero lower bound in monetary policy jargon. So he had to start talking about that. The SEP started under Bernanke. And Yellen is an academic. She's a labor economist, but also an academic cut from a similar cloth. She just continued those policies, and obviously Powell did as well. So no, you're right. Greenspan was far less forthcoming.
Let's take a quick break. When we come back, big earnings report tonight after the bell, and the first one for this $1 trillion+ publicly traded company. We'll be covering that next on the Financial Exchange.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
So, as we discussed yesterday, SpaceX will be reporting their earnings or lack thereof today after the bell. Their first ever earnings report as a publicly traded company. So, while markets are used to having Elon Musk speak to them about his companies, they haven't heard him speak about SpaceX in this fashion before. And I think Barron's yesterday kind of put it best. I'm just trying to see who wrote this. Al Root from Barron's. I'm just going to quote him from yesterday's article. Quote, "It's going to be wild," when referencing the earnings report. The reasons are fairly obvious. It's a $1.4 trillion company, which was a $3 trillion company only a few weeks ago, valued at 35 times estimated 2026 sales, not earnings, led by the world's richest human, Elon Musk. So, yeah, I think with that context, a company that is today $1.4 trillion, just a couple weeks ago was $3 trillion, and is trading at valuations that, if not literally, then nearly no other company in the world is trading at, it is going to be pretty fascinating to watch what he has to say about this company's future. At the same time, as he's doing this, more and more buckets of shareholders who were either pre-IPO investors or IPO investors are reaching the point that they're able to sell their shares on open markets. And while I don't want to read too much into how a stock trades in the first, month and a half of its public debut, this one has been exceptionally volatile.
Is it going to change anybody's opinion? They're expecting massive losses due to upfront investments. They have probably well-informed targets of Starlink subscriber growth, for example. AI, who the heck knows? He'll even if he makes something up, people won't sort of push back. His magic touch has worked in the past. So
yeah,
I mean,
who is he going to convince?
If the substance is terrible, he's going to spin it positively.
Yeah,
stock might even go up.
Yeah,
how horrendous would it have to be for him not to be able to put some sort of positive gloss on it, or just say, ignore that, let's talk about the future,
X, Y,
which
and
seems
Z.
to be what investors in this company are focused on.
Yeah, it is also, remember, a pretty massively complicated conglomerate, right? We have a massive space exploration business that is mainly defense contracting with NASA and others. We have another business unit that's related to space, which is sending satellites into orbit in order to beam internet down into all sorts of homes, planes, cars in the future, all sorts of different things. And then we have this AI unit as well as a social media unit. I know we've kind of combined those two together at times with X, formerly Twitter, and Grok, or the other AI business, all getting mushed together. But those are all components of SpaceX, which then frequently get commingled and talked about with Tesla and their own assets, such as the fact that Tesla is apparently going to get Starlink internet service. that perhaps Tesla's research and technology on battery development could be useful in the AI space. And so increasingly so, even more than before, it's becoming more and more confusing, I think, to Elon Musk himself and the general public, which of these companies does what and how the interminglings work. And which is why ultimately, whether he's successful in it or not, I think it's fairly clear that Elon Musk sees a future where these two companies are merged together under one house and are more efficient as a whole rather than the sum of its parts.
Yeah, I'll say again, I don't think anything that happens today matters. The results are going to be horrendous, probably.
Mm-hmm.
Doesn't matter. Does it? Am I being flip here?
Yeah, I
what matters is what he says and what people are willing to sort of believe.
How optimistic he sounds. Yeah.
And he's going to sound really optimistic. You think he's going to be downbeat?
No, he doesn't do that. So yeah, the question to me is more, it's less about what the context is of what he has to say. He's going to report terrible results and be really optimistic about what the future holds. The question that I have is, does it actually convince anyone?
Yes, it will. Well,
we'll see. In the aggregate, does it convince investors enough to drive the stock
people who
up
already
or down?
Oh, okay. So people,
we have this nice little voting machine that we get to look at every single
you're
day.
Right. Okay, yeah, right. I'm being a little too.
The stock's
cavalier.
up 3.6% this morning. So when Elon starts talking, does the stock price go up or down tomorrow? I think is the relevant voting feature of did he do a good job at this? Because you're right. There's likely, maybe we're wrong, but there's likely nothing financial that's new to the S report that's going to surprise anyone.
His acolytes don't care. They're with him through hell or high water. Mm-hmm. It's kind of a cult in a positive. I don't mean that negatively, just sort of descriptively. And some people are cynically members of the cult. They just want to pass along their shares to a more gullible cult member at some point at a higher price. Others really believe it, and they have reason to because he's built tremendous businesses historically.
Yeah. So we'll see if there's any disruption to the Elon Musk cult as we report on earnings this afternoon that will be released. By the way, not the only giant company that's reporting earnings. Another one with just massive valuations attached to it is Advanced Micro Devices, AMD, which is itself a $750 billion company, will be reporting after the bell as well today, which, again, probably only second in the semiconductor space to NVIDIA, massive gains in their AI business, and by some measures actually more richly valued than NVIDIA at this stage, albeit a fair bit smaller in terms of market cap, a very much looked at earnings report as well.
Just stepping back, looking at markets today, the quick run-up in equities over the past couple of weeks, bond yields coming down. This doesn't feel like an environment in which financial conditions are Fed funds. I'll use financial conditions to mean more or less Fed funds are restricted. Back to the Fed for a sec. I'm just what is Warsh thinking as he looks at his Bloomberg and sees all this exuberance? Real rates are zero right now. Real Fed funds after inflation, about zero. I mean,
what I mentioned, Mark, that didn't feel healthy to me over the course of the last 2 weeks was the day after price action on these giant behemoth companies, Apple, Meta, Microsoft, and Amazon. The day after they reported earnings, each of them moved up or down by nearly 10% or more. And
Apple
not
and
to
Meta
say that
went
wasn't
down.
deserving, but to see, $2, $3, $4 trillion companies moving 10% in a day just doesn't read to me as a terribly healthy or restrictive investing environment that we're in right now. And I don't know that speaks anything about the future, but in this moment, while the S&P has been relatively flat, the underlying components have been quite volatile. We're going to take a quick break. When we come back, full market update for you with Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled Navigating Retirement Housing Choices. Mike, when we look at the considerations for people in their housing and retirement, one that comes up are these continuing care retirement communities, CCRCs, or age-in-place communities as they're known. How does someone make a decision about looking at one of those?
Well, I think obviously you have to sort out your priorities, but the first thing is to think long-term about this. And what people sometimes overlook with these places is that term continuing care means that they adapt to your needs over time, but they do not just allow anyone in. In a lot of cases, they will have cognitive and physical tests that you need to pass in order to be accepted into these communities that then will provide all sorts of care later in life. And so I think early on is always better if you're considering that sort of thing.
The financial aspect of these also has a number of considerations as well in terms of what's actually affordable given your particular budget and liquidity.
Do I need a buy-in? Am I going to rent a place? What are my options for later in life? And then all sorts of tax considerations. Hey, I really want an income tax-free state. Well, is that worth it if I'm going to be paying more in property taxes given the composition of my assets and income? All of these really important considerations.
The guide this month is titled Navigating Retirement Housing Choices, and you've got a couple different ways to request it. First, you can call 800-393-4001. The second choice, you can go to armstrongadvisory.com and request it there. Again, that website is armstrongadvisory.com, or you can get it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. powerful Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, we're seeing markets stage yet another rally today following a new flurry of earnings. Also, Treasury Secretary Scott Bessent told CNBC that the U.S. and Iran could reach a deal to open the Strait of Hormuz as soon as today or Wednesday, sending oil lower. Right now, the Dow up 1.5% or 801 points higher. S&P 500 up 1.25% or 95 points higher. NASDAQ now up 1.8% or 469 points higher. Russell 2000 is up 1.25%. 10-year Treasury yield down 4 basis points at 4.63%, and oil down nearly 5%, trading at $76 a barrel. Palantir surging 27% after the enterprise software company posted earnings that CEO Alex Karp deemed as otherworldly, driven by customer demand for AI sovereign tools. Meanwhile, McDonald's said sales at U.S. restaurants climbed only 0.8% in the previous quarter, its slowest growth since the start of 2025. The fast food giant also named Sky Anderson as its new U.S. president. Shares are up by over 1%. Elsewhere, Caterpillar handily beat earnings expectations and lifted its profit outlook. That stock up by 5%. Wayfair rallying 27% after the online furniture retailer saw its strongest U.S. growth since 2020. And after today's close, we'll see AMD and SpaceX report their anticipated second quarter results. The stocks, AMD is up by 7% at the moment, while SpaceX is up over 3%. I'm Tucker Silva, and that is Wall Street Watch.
Alison Traeger out with a piece today in Bloomberg, responding to the kind of founder of the 401ks piece the other day, who was critical of it and wanting to float other ideas for retirement stability in the American public. And Allison is a good defense of the 401k in this piece and calls it the best retirement plan. And I guess, Mark, we didn't need to have 401ks, right? The Congress wrote a tax rule
the loophole.
That was able to have a loophole driven through it and allowed the dramatic expansion into 401ks.
It wasn't intentional either. I think Benna realized that under that code section, an employer could sponsor a plan. He put together parts that nobody else had put together. And others quickly followed.
And then subsequently, Congress stacked a bunch of rules on top of it to allow it to expand.
They realized what employers were doing. Big firms like Fidelity and others got behind it, started selling them to employers as free in the 1980s. The rest is history. Yeah.
So let's assume that loophole didn't exist. Is the 401k the best retirement plan? Because we have others, right?
It's unclear.
You've got a pension plan.
Well, yeah.
You could have a different form of saving, right? So is 401k the best way to do it?
I mean, it depends on what you mean by best. Like for whom? For an individual? Yeah, I like the idea.
The American public, yeah.
Yeah, if you expect to be in a lower tax bracket in retirement, it makes sense.
Yeah.
So yeah, period.
I will say it's a uniquely American way of retirement saving, right? It's nobody's going to force you to do anything. It's you have control over your own retirement future. You determine how much you save, how much you need, and no employer or government is going to do it for you. We have other programs like Social Security for that, but it largely replaced the pension system, in part for those. Well, I think mostly it replaced the pension system because pensions were expensive and annoying for companies to hold on to, but also arguably to give the individual more control over their own future.
Yeah, I mean, I don't think is it a good or a bad thing? It's the best tax-deferred vehicle for an employee to take it. I mean, you get a match. You're foolish if you don't at least take it. Most people do.
Yep.
If you don't at least take advantage of your employer match, they tend to be run pretty economically. They're much more. They're much more cost effective than they were 25, 30 years ago.
Yes.
Thanks to index funds, thanks to competition among record keepers. I mean, if you're an employee of a company that offers one, of course you should participate unless you think you're going to be in a higher bracket in retirement, in which case it wouldn't make sense to pay. Maybe you want to pay the taxes today.
There are downsides to any retirement system, right? As critical as I can be to a 401k, the nice thing about it is I'm not reliant on the company's success or failure to fund my own retirement.
I mean,
in the
Ben's
future.
point, though, is that it does favor, look, it's a 401k. It favors people with a job.
It favors the rich, too. It favors those on the highest income spectrum.
Yeah, I suppose it does. It would be hard to design anything that induced. It's not. It doesn't really try to increase savings. Indeed, the 401k has not increased savings at the aggregate level.
Aggregate, yeah.
Right. Since it came about, savings have gone down, not up, as a percentage of disposable income.
The one thing I'm confident saying about them is that they are, while they're widely available now, they've gotten a lot better and cheaper than they were 30 years ago.
Much more professionally run, too.
The investment options, I would also say, have gotten generally better.
Light years better.
Yeah, generally better than where
they were
a nightmare
previously.
In the 90s. And I think, honestly, the laws that Congress has passed over the years to improve them and, for instance, provide some liability protection for companies to, for instance, auto-enroll people, auto-increase people, place them into funds of their choosing on their own, in the aggregate has benefited people.
Yeah, it's been mostly reactive.
Yep.
I mean, the private sector's innovated, taken a chance.
Yep.
Applied to the IRS for what they call a determination letter. Hey, is what I'm doing here legal? And sometimes the IRS says yes, sometimes it says no. If they say yes and it's popular, Congress gets wind of it and enshrines it. So yeah, Congress has been reactive. The innovation has been happening in the private sector.
That having been said, I'd also say it has made retirement planning a fair bit more complicated than just collecting a pension and social
opinion letter, advisory letter. Pardon me. Sorry,
I would argue it's made it a fair bit more complicated than merely collecting Social Security and a pension. Yeah, like in the reasonably few clients that I work with who do receive a pension, building out their retirement strategy is fairly straightforward. You've got this savings. Your pension and Social Security need to cover the vast majority of your expenses, and if they do, then you're in a good spot. If they don't, then you've got some work to do. Doing the same thing with a 401k is more complicated. You have a lot more decisions to make in terms of your enrollment and contribution. You have more decisions these days to make in terms of whether you are contributing pre or post-tax. And there are different age thresholds where completely different rules apply at, say, 50 and then 60 years old that just simply didn't exist with the pension system and now do exist with this more voluntary retirement system. Overall, I tend to agree. The expansion of the 401k has put retirement in the control of the individual rather than the corporation, and I do like that overall, but it does lead to more planning considerations for the average person that might not be fully equipped to handle them. And in fact, I would say most people are not fully equipped to assess, hey, what's the right percentage to contribute in order to ensure that I can retire by this age? Should I be doing traditional or Roth? If you have questions along those lines about your own retirement plan and your spending future, Armstrong Advisory Group works with our clients every day to sort out these questions. It might not be, hey, you need to make massive changes, but hey, am I saving enough for my future to be able to support myself at this age? Hey, I have this much. Do I still need to plan to work for another 6 years, or could I potentially pull this off under a different scenario 3 years earlier? I always tell folks this, it is a lot easier to go to work every day when you have a plan about when you can stop working. If you want to talk to somebody about your financial future, the number is 800-393-4001. Again, 800-393-4001 or armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Markets are absolutely surging here today. We've got the Dow Jones Industrial Average up over 800 points, more than 1.5%. S&P 500 up 103 or 1.33%. And the NASDAQ closing in on 2% up for the day. That's after Bessent says that progress has been made to reopen the Strait of Hormuz. It could come this week. Oil prices moving down 5.2% in reaction on the West Texas crude benchmark, and we will see. The American investor and the global investor has been head faked on Iran news some 9 or so times since the breakout of war in late February. We will see if this happens to be the moment. I have some doubts personally, but investors moving stocks higher on the day early Tuesday. Let's take a quick break. When we come back, bit of Stack Roulette is next.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
The 2026 DAV 5K Boston is set for Saturday, November 7th at Fort Independence at Castle Island. If you want to participate, now's the time to register. More than 800 runners have already signed up, making this the fastest registration pace in history. The event will be a sellout soon, so head to dav5k.boston for all the information on how you can take part. And if you can't, please consider making a donation. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Good old Florida is always just a good provider of news for Stack Roulette, and today is no exception. If you're looking for a new dining experience in Florida, Class Soiree Steakhouse in Hollywood is now holding evenings where you can eat your entire meal in the nude. Tickets are $250 for men, $150 for women, or $300 for couples. And call me a prude, but I am not interested in eating a full meal while sitting in a steakhouse naked, and I also have a lot of questions about the cleaning procedures.
Seclude that
for
clip
going to for going to the steakhouse the
what's
day
the appeal?
after. I'm not sure, but yeah, apparently they're doing just fine with it. It's legal because the staff members are required to be clothed at all times. So Hollywood, Florida managed to, I guess, clarify the legality of the issue here. But yeah, I don't know. I don't find that to be an appetizing environment for me personally. Maybe I'm just not with the times, and this is exactly what people are looking for in 2026. But no, I'm not interested.
You got to be careful too, because steak's like sizzling. You don't want to drop anything.
Yeah, I mean, I hope they don't serve it on a hot buttered plate like I like my steak, because that could lead to some second-degree burns in some places that you've never been burned before. Yeah,
Tickets are $250 for men, $150 for women.
Well, of course they are. It reminds me of, what was that website where it encouraged you to, anonymously cheat on your spouse, and it got leaked, and it was like 90% men.
It started with an A.
Don't pretend you don't know, Tuck. Come on.
No. Yeah, I know what you're talking about.
Yeah. I mean, of course it's $250 for men, because it's going to be all men.
Ashley Madison. Thank you, Ben.
Yeah. Okay. So anyway, that's the news out of Hollywood, Florida. If anybody is looking for a dinner reservation this week, what do you have for us, Mark?
Something a little more traditional.
That's too bad.
We were talking about the yen and the dollar earlier, and you and Chuck talked about it yesterday. There are beneficiaries of a relatively weak yen. The yen had declined about 10% relative to the dollar. Similar performance against other big currencies over roughly the past year. But this benefits Japanese companies. Toyota, for example, reports the Financial Times, is going to buy back over $6 billion of stock because their coffers are filling more quickly, because imports are more your exports become more competitive when your currency gets weaker.
This is fairly obvious concept here, but again, if you are producing something in Japan and trying to sell it to the U.S. consumer, think a Toyota car. If you're taking dollars for it, you want a weaker currency.
Exporters want a weaker currency.
Yeah.
China artificially suppresses the value of the yuan to make their exports more competitive, for example. But there are beneficiaries, and they include not just people who work for Toyota, but shareholders too. So not everybody is cheering recent intervention, I'm sure.
Interestingly, though, again, if we think that concept all the way through, it does make American exporters weaker next to
well, that's a motivation.
The Japanese, is it not?
Well, the dollars, even though we sold euros, the upshot of these interventions has been to push the dollar relative to the yen down.
Right.
It takes more dollars to buy a yen, if you want to think about it that way. That's the reciprocal of the way it's usually quoted, but you know what I mean. So, yeah, on some level, our motivation is to make American exports more competitive. That's not high on the list. The effect won't be large, but certainly doesn't hurt.
A broken housing market, soaring costs, and Trump 2.0 are killing the Massachusetts economy. It's time to do something about it. I gotta tell you, so there's this piece in the Globe today about extolling the Massachusetts economy for being terrible, and look, we've lost 182,000 residents over the last 5 years to other states, and I recognize that we have a cost of living problem here in this state. I recognize that I think tax rates are too high, and we have been losing net some portion of our population. But if you had to choose to be like born into a household in any state in the country, there aren't a lot where you could plan on a better outcome from getting an education in this state and then being employed
it's expensive
by an
because
employer in
wages
this
are
state.
high. It's expensive to live here because wages are high and GDP per person, income more or less per person is high. It's like twice as high as your typical southern state. I'm exaggerating only a little bit. Where Massachusetts, California, New York, Connecticut, expensive but rich in a relative sense.
I was going to say, like, on average.
Rhode Island too. Rhode Island is a little bit poorer, but not in an absolute sense.
Sure.
Just in a relative sense. Massachusetts is unusually blessed.
Now, I do think, like, hey, the trend is what's important here too, right? Like, you can boast at being the number one in education and number one in income in the state, but if it's trending in the wrong direction, that's still a problem. And so I think some of these things should be addressed, but the state's finances aren't as terrible as they once were. We are still, from test scores and things like that, among the best educated in the country. And so I think addressing things here on affordability would definitely be important for the Commonwealth of Massachusetts. But this article's written as though the state's falling apart, and I just don't think I see it that way.
I don't think most people who live here see it that way. I would prefer much lower taxes and that state government do less, like you said, but that's just ideological.
Mm-hmm.
I can't complain about quality of life, quality of health care.
Yeah, I can pick apart some of the policies, but I have a tougher time picking apart the outcome.
Well put.
As we close out the show today, markets are strongly in positive territory. We'll have a full recap tomorrow, but NASDAQ up 2% now. S&P 500 up 1.4%, and the Dow Jones Industrial Average up nearly 1.7%. We'll have SpaceX and AMD earnings today after the bell. Stay tuned tomorrow for a full update.